Tomorrow, this has the potential to move the stock market as we see the S&P 500 and NASDAQ making new all-time highs today. Now, we come over and look at how the indices fared across the board today. The Dow was up 229 points. The NASDAQ was up 153 points. S&P 500 up 33 points, with the Russell 2000 being up 2.85. We come over and look at advancing issues versus declining. We had 70.8% of issues advancing on the day. Then we come over and look at the sectors across the board. Only two sectors were in the red: healthcare and real estate. Every other sector was in the green. And if you look, technology, industrials, and financials all up over 1% on the trading session. Now we come over and look at the king of AI, NVIDIA, once again making new all-time highs in the market at a time when we're back into extreme greed with a reading of 76. However, when we come over and look at the most recent investor sentiment survey for the second week in a row, as the market continues to make higher and higher highs, you can see that the bullish sentiment is actually dropping off. This week we had a reading of 39.3. Prior reading was 41.4. We can see the neutral category dropped down a bit this week to 21.8, where the bears stepped up here just a bit. So as we look at the market, we have to ask ourselves, has the market went too far too fast? We can see that right here. One strategist thinks the trade has gone too far. And again, it's not that the fact that the market cannot go any higher, but if you come over here and we look at this, we have not been able to muster in a 38% retracement all the way back to April 7th, where he put the low in and the market continues to rally up. There's just no way the market tends to pull back. It's like every day, new high, new high. Oh, maybe we get a little fake out right there, only to go right back up. And notice, once again, we're back above the high volume node on the composite profile, and we're not going to really see any meaningful selling until we can get acceptance below the high volume node. Now, yesterday we got a little volatility in the market thanks to all the rumors about Trump going to fire Powell and such. And we see right here from this article, the Fed building renovation at the heart of Trump's effort to oust Powell. And we talked about this a little bit yesterday and on the live streams. Speaking of live streams, if you guys don't want to miss the next time I go live, make sure you're subscribed. You have the bell notifications turned on for all. Tomorrow, we have Take Profit Trader accounts to give away. But was yesterday nothing more than Trump just floating a trial balloon out there, seeing what the reaction would be if indeed he went to go ahead and fire Powell. Now, today was a good day out there. If we look at what we had on deck, we had core retail sales. We had the weekly unemployment claims and the Philly Fed Manufacturing Index. If you look right here, the Philly Fed Manufacturing Index came in at 15.9. They forecasted a negative 1.2 read and previously 0.4. Also, if we look right here, the jobless claims dropped for the fifth straight week to the lowest level since April. It's a no hire, no fire story, economists say. And I got to be honest with you, when we saw the news come out this morning, I was like, uh-oh, hold on, buckle up. And it wasn't just that, but we also look at the retail sales. Snap back after trade wars die down, shoppers keep the economy growing. And we come back over here and we just look real quick. We can see retail sales core retail sales came in at 0.5. They forecasted 0.3, previously negative 0.2. Retail sales month over month, 0.6, forecasted 0.1, previously negative 0.9. So when we had that data come out, I was like, uh-oh, watch out, buckle up. We're going to get ready to run and make a new all-time high. But if you come over and look at the futures markets real quick, when we had those numbers come out, you can see right here at 8:30, we got a little bit of a blip. Then we corrected, and it really wasn't until later on after 10:15, where the market put its foot in the ground and just continued to rally up the remainder of the day. We actually come over and look at the SPY on the daily chart. You can see today we pushed, made a new all-time high. The SPY today was up 0.61%. We come over and look at the RSP, the equal weight S&P 500. We can see that was up 0.82%. So today the rally wasn't just about the Mag 7 stocks out there, but it was a broader participation across the board. Now, if we come over and look at the volatility index, the VIX today was down 64 cents on the session. And when we look at this, we can see the VIX closing very near the session lows. Lower VIX normally is favorable for the stock market. However, if we come over and look at the dollar index real quick, dollar index today did close up for the day. And notice we did get a wick on top of this candle. The dollar was up substantially higher. And at one point this morning, we were talking about this on the live stream as well. We saw gold. Gold was actually spiking down, but now gold has been able to close with a hammer candle. If gold can stay above the price point of 3291.6, then we still have the potential to see gold make its way up, completing the ABC pattern above us And if we can get above this whole distribution area of the profile, watch out, gold's probably going to make another new all-time high. Now, we're going to talk about something that could move the markets in a big way tomorrow. But first, let's come over and look at the 10-year yield. The 10-year yield today basically forming a candle of indecision. Wick on the top, wick on the bottom. The MACD indicator is still extremely strong. Now, we've been talking about this time and time again for way too long at this point. We still have this potential ABC pattern target all the way up here, and that pattern will be invalidated if we see the 10-year yield getting below 4.127%. As long as we stay above it, this could be what's called a complex A to B equals C to D pattern, and we could still be working our way up there. Something to note though, if we see the 10-year yield continue to rise up, watch out, that's going to be problematic because things are probably about to come down. Amazing deals out there. Apex Trader Funding, 80% off all evaluation accounts. My Fund and Futures, 50% off first-time users. Traderify, 35% off all accounts. Use promo code Mike. If you guys want to trade with a prop firm with the best payout policy out there, Take Profit Trader, right now, 40% off all the evaluation accounts. Best yet, no activation fee. Take advantage of these offers. Use the link in the description box down below. Now, if we come over and look at the economic calendar, look right over here for Friday. You look at the calendar, you say, not much economic news to contend with. However, at 10 a.m., we get preliminary consumer sentiment, followed by preliminary inflation expectations. Now, if you join me during any of the live streams, you know, once we get this news out, quite often the initial reaction isn't a big move in the market, but it's a move to where it can set the tone where we end up with a trend style day. Now, something that has me thrown off a little bit in terms of thinking maybe this sets a trend for tomorrow would be the fact that how the market traded today. We just went up, up, up and away and really had very little pullbacks out there. Now, if we look at the SPY on the 4-hour chart, MACD indicator still crossed to the downside, still working its way down to the zero line. And look, every time we come up, we keep pushing slightly above the high, bam, back down. Slightly above the high, we have not come back down just yet. So we'll see tomorrow if we start to return back down towards the high volume node at about 624. Because as we look at the 30-minute chart, notice the MACD indicator has made its way well above the zero line. And now we're starting to get that arc in formation. Does not mean we can't go further. Now, if you've watched my video in the past where I talk about how to trade the P as in Paul shape profile, you can look at today's profile shape as such. If we start breaking below this distribution here at about 627, you can start to look for lower prices. If you want to be more conservative and consider this whole part of the P, then you can wait until we break below 626.69. Now, to put this in context, what you want to do is pull a Fibonacci retracement from the high of today down to the low. And with the P-shaped profile, we want to look for targets anywhere below the 38% retracement at 625.81 or potentially lower when trading the P-shaped profile. Now, when we come over and look at the futures markets real quick, we look over here at the S&P 500. You can see we had 100% Fibonacci retracement. And we were talking about this on the live stream. Once we broke the 78.6, it was almost certain we were going to make another new all-time high. Now, as we look at this earlier in the week, we opened up down below value area low. We rotated all the way above value area high, set a trap, came all the way back down. But then look at the tail on this candle. That tail in the candle was put in and then whoop, right back up. If you notice from the low right here, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles up in a row with only one down candle. Now, at some point we will start to pull back. So tonight, if we start going up even higher, what we'll want to do is start using this structure breakdown point as a potential target location. Now, as we come over and start looking at the daily profiles on the 30-minute chart, we have value area high about 63.45 and a quarter. Point of control is just below that at 63.41.25, with value area low being down here about 63.18 and a quarter. So as I'm looking at this, what I want to do is I want to use this distribution part of the profile. If we start breaking below that area, I want to start looking for the lower third of the range for a potential target area. And just as I look with my eyes, naturally, my eyes are attracted down towards these swing points right over in here at about 63.09. However, let's go ahead and pull a Fibonacci retracement. Swing high down to the swing low, and notice that is right where the 38% retracement does come into play. So that will be one area I most certainly want to watch. Anything below that price point, we can then look to target kind of this minus development area about 62.99 down to about 62.94. Keep in mind, we did not take out the point of control today. And if you look real quick, we have a floor trader pivot, which was not hit today. So tonight, when the markets open up, look to see where the floor trader pivot is. It's going to provide a very high probability target for us. Now, as we come over and look at the QQQs real quick, we see we had that move up. We had another new all-time high. So if you're tracking this Fibonacci retracement, we simply have to move it up once again. And maybe after tomorrow, we'll be moving it up once again. At some point, we will start to get a pullback in this market. However, the market has been defying any type of pullback at this moment. We come over and look at the 4-hour chart real quick. And what do we see? Well, we're above this high volume area, but look, we kind of have a void right up in here, kind of a minus development area. I think at some point we're going to come back, revisit this area. And once we can clear this high volume area here, then it'll open the door to a much deeper retracement back down. Now, as we come over and look at the 30-minute chart, we can see a very well-defined P as in Paul shaped profile. Now, if we break right down here about 561.10, we'll see that'll open the door for the market to come back down and retrace to the lower third of the range. So once again, we can grab our Fibonacci retracement tool, measure right up here from today's high down to today's low. So we'd be looking for targets anywhere from 559.18 and below if indeed we can break that level. Again, it's an if then syntax. If we can not get below that level, there's no need to worry about lower prices at that point. Now, as we come over and look at the NASDAQ futures real quick, we were talking about this today on the live stream. I said, once we got above that 78.6, watch out. We're coming all the way back up, making another new all-time high. And that's exactly what happened today. Now, I had the analysis right today. However, on live stream today, I did not trade very well. I took a lot of paper cut losses out there. But one thing I did do well, I did not let my full stop loss get hit except for one time out here today. Now, if we look at the volume profile, notice what we have right here. We have a huge minus development area of the profile. Now, we can also see we have a structure breakout point right around that area. If we go ahead and map this out, candle wick right down here to the candle body. This is going to be a high probability target that comes back and gets tested in the very near future. And I would lay my bets that most likely that's going to occur either tonight or tomorrow in the markets. Now, as we come over and look at the daily profiles real quick on the 30-minute chart, what do we have taking shape? Well, we have that P as in Paul shaped profile. You can see as the market's pushed up, we have a lot of volume up here. So if we can start breaking below the high volume node, well, guess what? All the traders that bought up here will be weak buyers and they'll have to liquidate. And that's how we'll get that push back down. Now, just like we talked about with the S&P, we want to grab our fib from the high down to the low. And if we start breaking below that distribution area, then I want to start looking for targets at the 38% retracement or lower. The 38% retracement in this case comes in at 23,116. Also note, we don't know where the floor trader pivots are at just yet because we have about a half hour before the markets actually close at 5 o'clock. But if you have the floor trader pivots up on your chart tonight at 6 o'clock when the markets open, look to see where the floor trader pivot is, as that will also provide another high probability target because we look down here today, we did not take out the floor trader pivot. We did not take out the untested point of control. And we're going to see, will the markets continue to fly and make new all-time highs? Now, if you'd like to learn more about how to trade the volume profile shapes out there, then you want to make sure to watch this next video right here.